Have you ever wondered how the S&P 500 index, a key benchmark of American economic health, came into existence? A fascinating story indeed. The S&P 500 was born in 1957, courtesy of Standard & Poor's, a division of the renowned McGraw-Hill. Yet its roots stretch back to 1926, when it started as a humble index of just 90 companies. Why the leap to 500, you might ponder? Well, the financial wizards at Standard & Poor's realized that a broader representation was needed to accurately mirror the U.S. stock market. And so, in 1957, the index expanded to include 500 companies, spanning various sectors of the economy. This was not just an expansion in number, but a leap towards a more comprehensive reflection of the overall economic health of the United States. So, the birth of the S&P 500 marked a new era in the financial world, providing a reliable benchmark for investors and economists alike. Fast forward from 1957 to today, the S&P 500 has seen numerous highs and lows, hasn't it? From Black Monday in 1987, the dot-com bubble burst at the turn of the millennium, the financial crisis of 2008, to the COVID-19-induced market crash in early 2020, this index has weathered it all. Yet, despite these market shocks, it has continued to grow, reflecting the incredible resilience of the U.S. economy. The S&P 500 is not just about the big tech giants or financial firms. It's a broad spectrum covering all sectors of the economy, from healthcare to energy, from real estate to consumer discretionary. It's like a kaleidoscope of the U.S. economy. The index is rebalanced quarterly, meaning companies can be added or removed based on their market capitalization. This weighted system ensures that larger companies have a greater impact on the index's value, making it a dynamic representation of the market. Over time, the S&P 500 has proven to be a resilient and dynamic representation of the U.S. stock market. So why has the S&P 500 become a popular choice for long-term investors? Well, it's like having a front-row seat to the American economy's performance. It encompasses some of the best-performing companies across diverse sectors, from technology to healthcare, finance to consumer goods. This means when you invest in the S&P 500, you're investing in a slice of the entire U.S. corporate sector, offering a level of diversification that's hard to achieve with individual stocks. And let's talk about the historical returns. Over the past half-century, the S&P 500 has delivered an average annual return of around 10%. A 10% return year after year can significantly grow your investment over the long term. Moreover, the ease of investing in the S&P 500 through index funds makes it a highly accessible option for both new and seasoned investors. In conclusion, the S&P 500, with its wide sector coverage and historical performance, offers a robust and easily accessible investment opportunity for those looking to invest in the American economy.